Hello and welcome to the big picture. Is Indian economy finally recovering from a period of slow growth? The figures released yesterday clearly indicates to it. The 7.6% GDP growth in 2015-16 is above the expectations of the IMF, World Bank as well as the Reserve Bank of India. The 7.9% growth in the last quarter is a 5-year record high. The recovery and these impressive numbers, as predicted by some international agencies, is said to be led by increased consumption. Sector-wise, financial, real estate and professional services have all chalked up over 10% growth, while manufacturing, trade, hotels, transport, communication and services have shown a growth of 9% and mining and quarrying 7.4%. However, does all this add up to the 7.6% GDP? Why are there still doubts and concerns being expressed about these figures? How far are these numbers sustainable? What can we look forward to in the coming months? We will discuss all this today with Nitin Desai, former Chief Economic Advisor to the Government of India. Gopal Krishna Agarwal, National Spokesperson BJP, is on the phone line right now. Mohan Guruswamy, Senior Economist, and A.K. Bhattacharya, Managing Editor, Business Standard. Welcome to all of you. Mr. Desai, this is quite remarkable that, IMF, World Bank, RBI all had predicted a particular percentage, but it has gone above that.
Marginally above. Look, I wouldn't read too much into a difference between 7.3 and 7.6. I don't think the figures are quite that perfectly reliable. So I wouldn't say that. But the fact is, anybody who's around has said it will be more than 7%. And yes, it's 7.6. And the real issue is, does it square with what else we know in the rest of the economy? And there are other things which...
So consumption, it's being said that this is being led by consumption.
It is clear.
Would you agree with that?
That is clear, that it is, investment as a proportion of GDP is going down. That has been happening for the past 4 years. Export growth is in the negative territory. So basically it is consumption growth which has led to this. And the numbers show that. I'm talking of the annual numbers for 15-16. So does this square with experience outside? I would say that there are some straws in the wind which suggest that there is some revival of demand growth. You've seen this in areas like commercial vehicles. We've seen this in areas like cement, for instance, because of the construction side. But I think it's still a little worrying that despite this growth, investment continues its downward slide. And the real challenge is, have we got enough of a momentum to revive the processes of investment growth? I'm agnostic on this. I personally am a little more hopeful than
We'll come
some
to
people.
what we can look forward a little later. Mohan, how do you look at this? Are these figures, why are there still doubts about these figures?
I think there was some skepticism in my mind because on a quarterly basis, industry growth has slowed down, services growth has slowed down. Agriculture has suddenly shown a 2% spurt after a negative
Negative has
quarter.
come to 1.2%.
Now, we know for 2 years we've had the severest drought we've had for a long time in the country. Agricultural activities are almost at a standstill in 60% of the country. Which is
So how is it showing a growth?
So the question is, where is the data coming from? So the question, some of these things can be, because they're all estimates based on, Tehsildar's report or somebody else's report, and also some aerial imaging and all that. So, we'll have to look at that carefully. But if there is growth, investment should be there. Investment, so, we're seeing a new phenomenon. We've had, in the UPA's years, we had jobless growth. Now we are having investmentless growth, which is also another new phenomenon. We're seeing many new things. Consumption has gone up. Why does consumption go up? Somebody said, because people in the plantation are doing well. Our economy consists of, 2 tiers, a larger economy outside which is not getting affected, which is not benefiting, and there's a smaller number of people who are government employees, who are DA-linked people, who are all benefiting. So you had a pay commission report kicked in, so cars are going up, commercial vehicles, all these are going up. There's no doubt about that. That will give you a growth maybe for a quarter or two. But collectively the weaknesses will catch up.
Mr. Bhattacharya, would you agree with that? Weaknesses will catch up?
well,
or do you think that, looking at the figures today, these are figures which can be sustainable?
Well, there are two points I would like to make in response to your question. One is about the investment puzzle that Dr. Desai referred to. That
investment less growth.
Yeah, and that so you have a 34% of GDP was in 2011-12 was the gross fixed capital formation. Then if you bring it down, and last year it was around 31%. Now this is a cause for concern because going forward, how do you sustain this momentum? That was your first question. The second question that comes to my mind is the manufacturing sector puzzle.
Exactly.
Which is that if you look at the IIP numbers, they give you a manufacturing sector growth of less than 2% for the full year.
Yes.
And for the entire IIP, you get 2.4%. Now look at the national income numbers, they give you a manufacturing sector growth of 9.3%.
Exactly.
So now at some point, the two have to be closer to each other. Just to remind and refresh the memory of your viewers, last 2014-15, your IIP number was 4%, and the national accounts manufacturing was 5.5%. So there was some convergence. And what has happened in 15-16?
Here it is 2.3% and 9.3%.
9.3%. So that is something which raises some doubts about the numbers and sustainability of this growth numbers going forward.
See, I think one thing on the manufacturing numbers which perhaps viewers should know is the new series has shifted from a factory-based estimate to a enterprise-based estimate. So for instance, I have a corporation which has 10 factories. In the old system, what you did was you took the value added from the 10 factories. Now what they're doing is they're deriving the value added from the corporate accounts. Now that will include, besides the value added in the factories, the value added which is applicable at headquarters level. There will be.
But would that still explain the difference?
No. What I'm trying to say is that will explain only the discrepancy between the old and the new series. It cannot explain the growth. Because after all, it will apply both in the base year as well as in the next year. The second thing is, on the case of the IIP is a pure physical index.
Absolutely.
What it does not adequately capture, for instance, take phones. It counts number of phones. Whereas if I'm shifting from the basic phone to a smartphone, the value added at the enterprise level goes up. So the numbers in terms of phone sets will not go up. So to some extent, we have to be cautious in directly connecting. Again, there though, I would say that it's a little difficult to see why it should affect the growth rate. It will affect the comparison of levels between the old and the new series. So yes, there is an issue here. But basically, even the RBI's analysis of company accounts, particularly of small and medium enterprises, gives a very surprising results.
That's right.
What they're doing is not inconsistent with what the analysis which the RBI presented of the analysis of accounts. So I think basically, is it that basically the value added is going up, even though production is not, because input costs have come down sharply, in which case, of course, value added goes up at the enterprise level particularly.
More?
Yeah, because the cost of inputs has gone down. I'm still producing, let's say, 100 rupees worth of product, and instead of my input cost being 80, it has come down to, say, 75. Okay, that will show, that will be a growth. So one would want to look a little bit more into how this has been estimated, because the company accounts don't give me that number directly. It is derived from the company accounts.
Okay. Yes, Mohan, you wanted to add something? Or let me go to Gopal Krishna Agarwal. I'll come back to you. Gopal Krishna Agarwal, the numbers look very good. When there is certain amount of hope about the revival of the economy, but still there are some doubts and concerns being expressed about the numbers, the kind of discrepancies which seem to be which it seems to have come up.
Actually, in the statistical analysis, I have been hearing other speakers.
Yes.
Are you able to hear me?
Yes. Please continue.
Hello. Yeah. What I say is that you cannot talk of statistical figures in isolation. You have to think on what the philosophy the government is working on. there has been a focus of the government on creating demand. Why investment was not coming? Investment will always be lagging behind the demand. A private investment will not come until they see demand in the economy. The government focus was to create demand in the economy, whether through the infrastructure investment, whether creating infrastructure in the rural areas, whether providing entrepreneurs capital to the small and Dalit women and backward classes through Skill India, Mudra Bank. So ultimately government focus was creating demand, and through that demand pulling up the investment from the private sector, and through ease of doing business, transparency, removal of crony capitalism, attract the foreign direct investment. And therefore we see that this is a major success of our government, that we have been able to consolidate the fiscal figures, fiscal parameters across, whether it is inflation, whether it is fiscal deficit, whether it is revenue collection figures or revenue expenditure figures. We have been able to do justice to fiscal consolidation, one part. Second, we have been able to generate resources with the government to pull up the infrastructure investment in the rural areas, road sector, various projects in the power sectors. With these investments by the government and resources of the government through social security going to the rural areas from farmers to other things, we hope to create liquidity in those rural areas. So those segments, weaker segments of the society, so that ultimately the demand is created, infrastructure is created, and we attract private investment and we attract FDIs, so that the cycle of economic development pulls up. That is the basic philosophy where we are working. You cannot go just on isolated figures.
No, these are not isolated figures.
Only this 8% growth is,
I'm sure these are not. No, let me get the others in on this. Mohan, how do you react to what Gopal Krishna Agarwal says? The government, he says, government has created this demand.
He's entitled to a view. Of course, government has created the demand by giving a huge pay commission increase and adding 1.404 crores to the salaries of employees. So obviously that's going to be spent. But how does it translate into for the rest of the country? That is the question to be looked in, and that is what this economic management is all about, creating jobs. If you don't create jobs and you just keep getting growth, then what are you achieving? So this is another question. As he says, philosophically, we'll have to discuss this. You can have a session on philosophy or something. We can do that. But the important thing is, year over year, nominal GDP growth has come down from 10.7 to 8.5. It's a matter of concern because that is the real rate at which the economy is moving. Government revenues are below target.
Below target.
Okay.
Nearly 30%.
What I'm also more concerned about is the set of figures which I've been looking at from this morning, which says that gross GDP, the same quarter last year was 7.2, this year it is 7.9. Okay. Now, last year, there's a thing which economists use called invisibles when they can't reconcile figures. Last year, the invisibles were discrepancies. Discrepancies were 29,900 crores. Okay. This year, the discrepancies go to 1,43,000 crores. Okay. There's huge expansion of discrepancies. If you adjust that for this quarter, then GDP is actually growing at 3.9%.
Mr. Bhattacharya, what is this discrepancies?
I have an answer
this
to that,
discrepancies thing needs to be explained actually.
It has to be understood that the way the governments collect the statistics from the expenditure side and also from the production side.
Right.
So when you talk about the GVA as share of economies and everything, you are doing it from the production side. And this figure about discrepancy comes from the private final consumption, government consumption, and your gross fixed capital formation side. That's the expenditure side of the calculations. Now there, I don't think the statistical machinery is that advanced to collect data on private consumption. Government consumption data is a little more easy to collect. And of course, public administration, other things are a little more easy. But then there's a huge gap in collecting the private consumption figure, which is why there's always been traditionally, you have seen this discrepancy figure is there. And this last year is, of course, has gone up hugely. And this number is traditionally been seen as a filler to just, kind of round up the number.
They're talking of a discrepancy of 1.13 trillion rupees.
Net.
That's true.
Net.
Yeah, one
Gross
point
is
something, 1.3 lakh crore.
Yeah.
Yeah,
One
but
point-
remember,
Point is,
that's-
there is always going to be a discrepancy. I agree with that. But why the sudden expansion?
Yeah, but let me
Sir,
just,
how do you explain
No,
this?
no, no. I'm looking at the annual number. In the annual number, the discrepancy is 0.1% of GDP. It cannot explain. And this particular point, which is it's essentially because it's as if for you and me, so you are trying to reconcile, the, if you like, the earnings side with the expenditure side. You see, and let's face it, that sometimes something gets lost in between. One doesn't know which is more reliable, the earnings figure or the expenditure figure.
Precisely.
Because we don't know what is more reliable.
but this
by
huge-
and large, the general assumption in India has been that the production-based estimate is more reliable rather than the expenditure-based estimate. Because the expenditure...
Now are they looking at the expenditure based?
Yes, this is the discrepancy.
No,
The
the
discrepancy is between...
Expenditure side.
You have two indices, GDP,
Which is based on production.
production, and GDI, gross income. So there will always be a gap between these two, but this gap is always small.
This gap this year has suddenly become huge.
Has become 4 times big. That is why.
And how do you explain that?
That is why the inverted commas have to be put on it. I think why.
But I think
Some
4 times...
suitable explanation has to be given for that.
Even at one, it is less than 1% of GDP. Remember that. So even...
So it's not a cause for concern?
I would no, it is always a, but that's not the reason that one has to look. I think to focus on the discrepancy as a reason for questioning the numbers is misplaced.
Okay.
What you may need to question is the underlying data on production which has been used. For instance, a question which has been raised: how have you got
Manufacturing 9.3%, industrial production 2.3%.
Because it's a value-added figure.
There are a whole set of these figures, where question marks suddenly start coming.
That's a value-added figure. And one only explanation that one can today advance is that it's this much, even though we don't see that sort of evidence in physical production increases, is because of reduction in input costs. But is that enough? Does that show up here? So I think there are questions like this. But let me just say that the numbers, I do not think in that sense the numbers are totally unreliable. It's growth which matters. Whatever the problem...
according to you, are the growth numbers...
I think that if I were a betting man, if I were an investing man, I would say I would
go
work
with these
on
numbers.
this. I expect that, because I have also sensed in corporate results, in whatever conversations one has had, a change in mood in the past 2 months. A change in mood in the past 2 months because there's a sense that, yes, demand growth is picking up. I believe that if the second thing is that a lot of investment was held up because a lot of corporations were debt strapped and there was a lot of restructuring taking place.
Nothing has changed.
No, it has.
It has?
In certain industries, a fair amount of asset
Yeah, absolutely. Indian corporate sector, I'm sorry, I'm interrupting. Indian corporate sector, if you look at the Q4 results, out of the around 2,500 companies, if you take out the banking sector and take out the oil sector,
profits have gone up.
Profits and the revenue have gone up a 6-quarter high.
Some 21% more.
Revenue has gone up 4.2%, and profits...
You have to see the 6-quarter high.
No, we're talking about this quarter.
Yeah.
And the
last quarter.
Profits have gone up
By
by
20%.
41.78%. Okay? So huge.
That's a big...
So profits have gone up, revenues have not gone up. And if you look at, I've looked at half a dozen...
So what does it mean? Profits have gone up, revenues have not...
Let me tell you.
That is
Half a dozen sales have not gone up. Half a dozen balance sheets which I looked at from big companies, their other incomes have gone up. For instance, Reliance Industries, biggest private sector company, his other income column is becoming bigger and bigger. His operations...
What does it mean?
It means that they've got money, they're putting it here and there instead of building new factories.
So private investment is not coming in.
This is a value-added figure, not a revenue figure.
Right.
And that 41% increase in profits is what goes into value-added. It's not revenue which goes in. And this perhaps suggests that my explanation of falling input costs is maybe a big factor behind it. So basically, yes, there is more money.
I'm saying something else completely.
No,
I'm saying that operations have come down, operation profits have come down, and your income from other sources are going up.
But that counts as part of value added.
Yeah.
My point is, it is part of value added. It is when you're looking at an enterprise level.
No, sir, is it good for the economy? Is it sustainable?
What is not sustainable is a persistent decline in investment. The hope is that with this sort of, what I sense is a change in mood over the past few months, there is going to be some revival. The catch here is that it's very difficult to see an investment revival with a weak banking sector.
Sir, that's
That
exactly
is a
the
problem.
point. That's exactly Gopal Krishna Agarwal. Weak banking sector. If we see the bank lending also, lending hasn't gone up. Private investments, private sector has not invested. It still continues to be, looking at the government to provide the investments. So, how do you expect the government to help in this process?
Actually, I tell you, statisticians will find loopholes in any statistics. And I agree, there are several
These are
things
all
which
economists,
need to
not
be tackled
statisticians.
and done away with.
Yeah.
But what I tell you is, what our thinking is, the economic development depends on perception of the people. That confidence of the people in the decision-making ability of the government, their transparency in decisions, their fighting of corruption, all these issues, ease of doing business, their focus on ease of doing business, that only defines how the economic growth will take place, where investment will come. They don't only depend on these statistical figures alone. Ultimately, we have seen the confidence has grown of the investor in the Indian economy, in the government, whether it's nationally or internationally. Even when you talk of banking sector, where the banking sector has given a very bad results, all of the bank. But the day State Bank result came, it has shown a very heavy loss, but the stock market acted on a positive note, because the people are understanding this NPA problem was not there earlier and it has cropped up now is not the question. This NPA problem was always there. This government has the courage and the strength and the vision to tackle the economic problems head on. This is very important. Even I tell you, even the banking sector bad results have given increased confidence of the industrialists. I have been talking to them. I have been interacting with various business organizations. So this is important.
Okay.
The perception and
Okay.
confidence of the people in
Okay.
the future
The
of
credit-
the economy
the credit-
has
Agarwal-
gone up, and
Mr.
the
Agarwal-
crony capitalism.
Yes.
Mr. Agarwal, the credit for making the NPAs more transparent should go to the Reserve Bank of
Reserve
India
Bank
and
of
its
India.
governor.
I mean, even though late, they have woken
So
up.
he is part of the government. He is
Mr.
a part of the government.
part of the
sir.
government.
Mr. Agarwal, your government is not alone responsible for this. We are looking at the economy as a whole, as a continuum. There's a
No, no.
government. There's a government of
Yeah,
India.
yeah.
It does not matter which party is in power. We are looking at what the problems in this country are and what we need to
Yes,
do to
yes.
address the problem. We are not saying that your government should rescue everybody in 2 years or in 4 years. You can't do it. But are we on the track to do it?
Exactly.
That is the question.
Are we
No,
on the
no.
track, Mr. Bhattacharya?
No, I mean, I think
that-
the broad
yeah,
sense what gets
that's
is
what
that
I'm telling
we
you.
are on track. There are many more challenges.
No, the point made by Mr. Agarwal that there is a perception, and Mr. Desai also is talking about it, that there is a perception that things are improving. Would you agree with that?
Well, I think things are improving. They're looking up. But surely, if you look around and see things, that it doesn't look like a close to 8% growing economy.
That's the point. See,
The perception
bank-
Mr. Agarwal is saying, it doesn't look like an 8%
The greatest
economy.
weakness
Sir,
is
no, sorry,
the greatest
no, no,
weakness
That's
is
where
One second.
the doubt comes from.
The bank credit growth is not happening.
Absolutely.
Rural demand is not there. But still, how,
I mean,
how is this positive perception happening?
well, that is exactly what I'm saying is that there is something in the manner in which these numbers are being calculated in the new series, which does not correlate all the time to what exactly is you are seeing on the ground.
I think
Can I just
the
say
question
this?
for us,
Can I-
listen,
that to some extent, there is some evidence, at least in the cement sector, I know that there is a substantial increase in the offtake
Correct.
of cement at the household
Yes.
level. In household, what counts in the national accounts as household investment. To me, the greatest challenge is that I think the mood is getting better for investment revival, but how will you finance this investment with a weak banking sector? If I had to advise the government, I said your priority should be to lick that problem first. Because
The
without
banking
that,
sector problem?
yes, because look at the.
No, but it needs a huge amount of investment. Government doesn't seem to have that kind of money to invest.
No, I think the banks are not short of cash. Actually, today the offtake is not there. It's not that is not the issue alone. But I think basically they will have to inject capital into the banking sector.
Yeah,
How do they inject capital? That's where the problem lies. The kind of capital which the banks need are huge.
You need surgery here. You cannot just go in for recapitalization of banks. That's a trusted methods of governments in the past.
Yes.
And not just this government.
Yes.
And I think a time has come where you have to actually, bite the bullet and say that, you reduce the size of your balance sheet, and if you cannot continue to operate on those parameters, you just close down.
Isn't that what the RBI governor is trying to do?
Goes down, consolidate.
Isn't that what the RBI governor is trying to do?
Which means that you have to do surgery on those guys who can't pay your loans back. Those top 36 out of the 50 guys who got NPAs now, you got to do surgery on them.
Yeah.
You got to operate each one of them, make them hive off their companies.
So these are tough measures.
These are politically, do you have the will to do it?
Exactly. Mr. Agarwal, this is where the question lies. The ultimate challenge for the government will be that how do you encounter this challenge which Mohan is talking about?
What is the challenge he's talking? There was disconnection of my phone.
Mohan, please repeat that.
How will the government cope with the whole challenge of financing and investment growth if it starts with a weak banking sector, with NPAs, and how do you resolve that in time, not over years, but over months?
Because what I was saying is that you can't tackle NPAs alone by tackling the banks and merging the banks and doing all kinds of things. You also could tackle the lenders who are not able to service their interest.
The borrowers.
The borrowers. You got to tackle them. And for that, you have to do serious surgery.
Political will to tackle the borrowers.
So that's where the end of crony capitalism comes there.
Banking is one sector which is a problem. One sector which is in a problem. We have to capitalize them and take the NPA problem head on. One thing is that what we are doing is we are reviving all the infrastructure project. Whether you see in the roads, whether you see the project held up because of environmental
Agarwal,
more than 10 lakh crore projects.
Agarwal, the question was how are you going to tackle the borrowers, the big borrowers who have created this kind of a problem as far as the banks are concerned. That is a question which needs to be tackled.
And who are not able to service their debts.
Who are not able to service their debts.
We will strongly.
You will, okay.
We are going to be taking strong actions on crony capitalism. There is a clear-cut
that is very good news if you're speaking for the government.
The politician and industrialists.
Okay.
One thing, we will have to segregate the loans which are genuine risk and which have been genuine failures. Therefore, the Bankruptcy Act has been brought about. The rest will be strongly tackled by the bank. Whatever can be recovered will be done.
Okay, Mr. Bhattacharya.
Mr. Their assets will be pledged. All these things will be taken. Even government is thinking of setting up an investment banking fund.
Okay. Mr. Bhattacharya, very quick
fund
last
for the
words.
banks.
For them to sustain, is this the way out? What he's talking?
Well, I think you have to have a clearly well laid out plan for the financial sector.
And do you see that happening in this government?
Well, right now the finance minister has indicated in his budget a plan for consolidation, and which I would imagine consolidation would also mean reducing the government ownership to a level where government interference is by diktat is completely taken out.
Okay.
So I think that will be some movement forward.
I would like to add a little bit to that.
Very quickly.
I think first step would be actual active government interference in restructuring the companies.
Okay. I think on that note we will end. But this is a very interesting stage at which the economy seems to be and how the government will tackle it. Mr. Agarwal has given a lot of hopes and a lot of promises. We'll have to wait and watch how his government will implement all those. Thanks to all my guests. Please keep watching. We'll come back with another issue in the big picture same time tomorrow.